What's up, you guys? It's Henry. I hope you're doing well and you're staying safe. Today, I have a stock that I've mentioned once on our channel, but I find it way more interesting lately and I see a massive opportunity. Pennsylvania reported its sports betting handle has climbed over $500 million for the month of October 2020. And I live in Philadelphia, Pennsylvania currently. I used to play poker and I bet a little bit on UFC fights like Khabib versus Conor McGregor. Of course, I put money on Khabib because that was just easy money right there. I also put money on tennis on rare occasions before the shutdown. And this got me thinking about making money in the stock market, and specifically, I wanted to look into stocks that are involved with gambling and which companies benefit from this trend of sports betting becoming a bigger thing because people are on lockdown and they need something to do. And this is where I came up with DraftKings. As I looked into the stock, I noticed two important things that are just massive and big opportunities to take advantage. And number one, it is a very hot stock, and DraftKings and Penn National Gaming, through its Barstool partnership, handle a lot of that online action according to Play Pennsylvania Analysis. Number two, as you can see on the chart, the stock peaked at $63.78 on October 2nd and significantly fell off these highs fast, nearly 45% lower by the end of the month. Well, now the stock is climbing back up again and presents an interesting opportunity that I want to discuss today. Before I jump in, please smash the like button if you want to get stupid rich and if you like to gamble just a little bit. There's a lot of interesting stuff in play here. First of all, due to the pandemic, most casinos are closed, but people that want to gamble, well, they still want to gamble, right? They still have that itch, and online gaming is the solution. Not to mention, just as addicting and fun to play online and at the comfort of someone's home. I looked at online gambling statistics and was pretty shocked that around 26% of the population gambles. That means around 1.6 billion people worldwide gamble, which is just an awesome, crazy, I don't know if it's awesome, but just a crazy statistic. Awesome in terms of DraftKings though. And 4.2 billion gamble at least once a year. And as you might know, the house always wins because of the law of large numbers and statistics. Gamblers always lose to the house since the odds are stacked against them. Here's an image of the top 5 gambling centers. Macau comes in number 1 because that's the Chinese center, and number 2, which is America, the US and A, and worth $261 billion and holds 1.8 million jobs. Most of the jobs are in Nevada, as gambling is actually banned in most states. However, here's some really good news that I think you can take advantage of, and that is that Maryland, Louisiana, and South Dakota now joined 21 other states in allowing wagers on sports events. That's great because in US, DraftKings has approximately 35% of the sports betting market. The weighting is skewed depending on the state, of course, but it's really important that DraftKings has such a large dominance in certain areas. Specifically, New Jersey, for example, has become the leading state in sports betting, taking a record $748 million in September and $3.3 billion year to date. I'm almost in New Jersey, by the way. Actually, I could probably drive there in just 15 minutes. And New Jersey is sandwiched between New York and Philadelphia sports market. So it's not surprising New Jersey's market has grown so large. Also, the state is densely populated, so it has a large pool of bettors to pull from. There's also a lot of New York money since, well, a lot of families decide to commute to New York City rather than actually living in New York because they have families and they want houses in the suburbs. I bet those people are so happy right now that they're working from home, but nonetheless, those people do have money and they have some time on their hands because, well, they're not commuting as much, so it is a very big boom to the New Jersey gambling market. Louisiana, on the other hand, is forecasted to bring $330 million just in tax revenue each year, while Maryland would bring in an estimated $18 million in taxes from sports betting. So those numbers are pretty non-existent. However, they are growing, and New Jersey more than delivers the revenues currently. Now, there's actually a new analyst on Wall Street who initiated coverage and slapped on a juicy price target on DraftKings, but before I go into that, I want to look at the stock's technicals and analyze the chart a bit for more clarity for you guys. All right, guys, so this is DraftKings right now, and if you look over here, it did peak at $63.78, and since then, we have significantly fallen off of the peaks, and we have gone all the way down to just $35 per share, which was an absolute steal. However, DraftKings is actually popping up above the 30-day moving average right now. $30 billion and divided by 18, that's almost a double in the stock. So I'm kind of agreeing with the analyst that I'm about to discuss very soon, I think that the stock has room to almost double. So my price target for DraftKings would be about $90 per share if all things go well in the next 12 to 18 months. Now that you have seen that interesting technical analysis pattern developing the stock, let's talk about my new friend on Wall Street, Daniel Adam from Loop Capital Management. Daniel Adam initiated coverage on DraftKings stock with a buy rating of $100 as the price target. That represents over 100% upside from what we're looking at today. The company's shares popped on Friday after it reported earnings and raised its outlook for 2020 revenue. It's forecasting revenue in 2021 at between $750 million and $850 million, also represents huge expectations for growth. Adam wrote in a note on Monday that he sees online sports betting and online casino games as the most significant growth drivers for the stock. He estimates that the total market for the two areas combined could be as large as $30 billion when it finally matures, far more than the consensus view of currently $20 billion. This guy's bullish. He's bullish, you get the point. He had an interesting statement about New Jersey too. New Jersey is among the most developed sports betting markets, as I explained, but Adam believes it is far from maturity, given that the state only legalized sports betting just 2.5 years ago. The market is seeing a huge year-to-date growth. However, I do suspect this is not all organic because, well, the pandemic is adding to it. Now, Daniel Adams is a massive bull, so let's go down to the next bull on Wall Street and see who else is talking about DraftKings and what a more maybe reasonable expectation is for the stock, because, well, we can have multiple looks from multiple analysts. The next bull is Macquarie analyst Chad Benyon. His name is Chad. Enough said. Like, subscribe, I'll see you back here soon. Nah, I'm just joking. We gotta check with what Chad has to say, because just because he's Chad, we still have to review his work. Chad has DraftKings as an outperform with a price target of $65 per share. Chad mentioned a strategy he thinks DraftKings is using from Tesla and Amazon, and I think this gets really interesting. What is specifically happening is DraftKings is sacrificing near-term profitability, which is losing money, to later generate cash like Amazon and Tesla does. They're doing this to drive top-line growth while establishing dominant market share right now. They are not scared to invest heavily into the business and now, so later they can reap the rewards. Chad stated, "We think DraftKings can sustainably maintain top 2 share given their marketing expertise, database, brand awareness, and leading technology, which would lead to the creation of a multi-billion-dollar enterprise." This is going to sound a lot like Tesla, but the US sports betting market is still in its infancy. That means companies like DraftKings has to be spending a lot of money to compete and gain market share currently, but later, if this pays off, it'll be many times bigger than they are right now. Their current market cap is currently $18 billion. I just told my private Discord community of options traders I'm trading covered calls on DraftKings, and I think it's a phenomenal opportunity right now. For me, the opportunity is just too big, and I like the discount DraftKings is trading at compared to their highs. I'll have to see what happens over the next few quarters, but I'm expecting really big things, especially because we're living in this new world where going out is less common and we're in a loneliness epidemic according to research. Sure, the pandemic is bad, but closing down and staying indoors for everyone is creating a mental health crisis that is far worse than the pandemic, in my opinion. I've been researching the impacts on people, and it's just really bad, especially because humans are social creatures. We're meant to be bonded. We're meant to go out and do things together and be in teams, and being cooped up inside is probably the worst thing for mental health. Unfortunately for many, me included, that it really does impact people's lives, and I think things like alcohol and gambling will rise and make a lot more money. I wish this was not the case, and hopefully we can get back to normal life, but my best guess is that won't really happen anytime soon. And it seems to me big technology giants like Google, Facebook, Amazon, Netflix, and Microsoft are profiting immensely from this. So as investors, this is the reason that DraftKings is one of my top choices right now. Make sure you follow me on Instagram and smash the like button, because I try to give you my unbiased opinion and research so you guys can get stupid rich and make profitable decisions. Thanks for watching, and I'll see you back here very, very soon. Be aggressive in learning, but be safe in investing.